Hello YouTubers and welcome back to Frugal Finance. So today you're treated to a real picture of me, not just a screen recording. I found a little break in my day to sort this out. Hopefully you enjoy it. It do take a lot more effort to put these style videos together than the kind of simple screen recording. But nonetheless, I do apologise for not doing so many of them of late. Have been a little bit busy, which hopefully we'll come on to in a bit. So before we begin, if you could just click the like button down below. It's a little picture of a thumb. Just give that a little tap. That will turn that blue and it lets YouTube know that you quite like the video. And then hopefully what it will do is it will pump it out essentially to other people who might be interested in a similar style of topic. If you do that, basically that would make me really happy. If you've got any comments on the video at all, please do leave them down below. Don't forget, I'm not a financial advisor, so if you do need financial help and assistance, please go and see a trained professional. Just a guy on YouTube sharing his journey. A lot of people quite like that because it seems quite normal. I'm not too formal, and you know, from a big institution or anything like that. I'm just a regular guy. But having said that, obviously I am not FCA registered or trained to give you financial advice, so you shouldn't take what I say necessarily to apply to your own portfolio or system. So with that said, let's get stuck in. So today we're going to look at kind of overall wealth and wealth building. See, I actually come from a background where I didn't really have all that much money at all. I was working a pretty mediocre job until I decided I wanted to go off to university and try and better myself. And I know a lot of people kind of shun the educational system because you get into a lot of debt. And I'm not going to lie, I did get into a lot of debt in the region of £25,000. I don't know quite what that is in dollars, but probably $35,000. And in today's terms, that's quite low. People are getting up to sort of £50,000 in debt. So I left university with really next to nothing, probably best part of 12 years ago. So I left in the summer of 2009, probably just at the beginning of the kind of real property crash downfall. So what have I done to kind of, you know, really sort of become frugal and try to benefit from the system? Well, in reality, not a lot to start with. So I bought my first rental property in 2010, which was a doer-upper. It was in an absolute state, and realistically, basically, needed almost everything doing to it. And that was my first kind of venture into sort of property or real estate. That was a property that we rented out and has gone up in value since. Now, since then we have refinanced that to buy the house that we live in. We also then refinanced it a second time to buy a further property, and I have used kind of anti-lifestyle inflation methods to save up money in order to buy further property. So what essentially has happened for me is that I've accelerated my journey by buying more, so it's an accumulative effect. So the first one I bought obviously generated XYZ income. It went up in value. It's almost doubled over the 10 years that I've owned it for. And that has allowed me to then refinance or use that cash flow, whatever it might be that I've done, to save up deposit for another one. And then obviously I've got 2 times the same scenario. So you've got a steady flow of cash coming in each month from the rental incomes, which I have tried not to touch, and I've set it aside in order to buy further property with. And then you've got the capital appreciation. So most of the properties that I buy are dilapidated, they're below market value, as I've referred to in various other buildings videos even, and accelerated the growth of those properties. So you, for example, the one that I refer to, so I'll put up some pictures now, So this is the first property that I purchased. That was just over £100,000. It's pretty much worth double that. It needed full refurbishment at the time. That allowed me to refinance and purchase the property that I live in, which I haven't got a photograph of. I don't want you all knowing where I live. I might come around asking for autographs. Who knows? You never know. But that essentially allowed me to then purchase another property, this one here, which was a 2-bed property, which didn't really need an awful lot of work to it, but it was in a distressed position because the seller was probate, so they'd inherited it and the family were arguing and they needed to just get rid of the asset quickly. And then this one here I picked up off the back of that one because I was able to then refinance that and purchase this one and use that accumulative cash flow from 2 properties to fund the refurbishment. So that one had a new kitchen in it. And then finally we then thought we'd move away from flats. I know flats is kind of what I do for a living, but we then moved away from that into more into a house basically, which we purchased, and that needed full refurbishment as well. Been partly refurbished, to be fair to the previous owners, but again it was a probate sale. They'd inherited it and they couldn't sell it. They tried every kind of avenue, probably not a normal estate agent. They tried Gumtree, eBay, selling pages, all that kind of stuff to get rid of it, to try and avoid agents' fees. Well, for me that was an avenue to have an open discussion with them about obviously purchasing their property. And then finally there's this one here, which picked up at an auction because actually we don't manage to get enough cash flow together and enough equity in these properties to buy this one outright, which we've then later refinanced, which we're just doing right now, in order to purchase the following 3 properties, which are a 2-bed flat which needs full refurbishment, and a 2 up 2 down style property in the same road as the other house, and then a bungalow here which is in need of TLC, and that is actually going to have a extension to make it into a 4-bed property. A little bit of nostalgia on the particular bungalow because I used to live next door when I was a young child, and the current owners, who are still they were the owners back then, but they're still the current owners now, Mr. and Mrs. Christmas, of which my parents used to tell me, you know, Mr. and Mrs. Christmas live next door, so you better be good, otherwise you're not going to get any presents. Well, they still live there, albeit they're pretty elderly now and they need to go to assisted accommodation, so that property needs full refurbishment and we might as take the opportunity to extend it. So those are the things that I've got coming up, and you can see how I've kind of grown from one through to that system. And obviously each of those properties is a purchase price when new, and then obviously a refinance price, so what it is worth afterwards, and then there's capital appreciation on top of that. So actually that kind of net worth there is actually accumulated pretty quick, and you know, realistically that in itself has accelerated me from having really nothing all the way up to having, you know, currently 5 properties with 3 in the pipeline, plus the house that we live in, so that will be 9 if there is these particular ones come off. Obviously they could fall through, so they don't. So yeah, the cumulative wealth of that is pretty significant. We actually have to fill in a spreadsheet now for the mortgages. So, you know, actually if we got full market value, sold everything and stood on the street, it'd be probably worth about 1.2 million. Assuming that the 3 properties pull off, they don't fall through, and we actually have that particular values for those properties, because obviously you've got to sell them and then there are solicitors' fees. So all things being equal, taking all aside, that cumulative effect of capital growth and obviously the development value, obviously those figures are not the money that I've put in to refurbish them. They are literally just the price I've paid for them minus the current mortgage, the value minus the current mortgage, and then that's the equity that is left inside. So yeah, so it's a pretty fair chunk worth of property there. and wealth building as well. And obviously this video isn't about, oh look at me, I've got a load of property. What it's actually about is demonstrating how you can kind of have that snowball effect. So it's a bit like compound interest, but if you're utilising that rental income, because you've got a normal job, don't forget I had a normal job, so I'm not reliant upon the income, but I'm utilising it to snowball effect and buy more properties with that income, by being frugal with it and looking after it and making sure that it works for us. Obviously I'm relatively skilled with maintenance, DIY and things, so I can do a lot of these things myself to keep the cost down. So I'd recommend that if you're not very good at that, maybe you go and learn a few things just to keep some of the costs down for you. But at the end of the day, it's about that wealth building. Now, obviously, you have to sell all those properties to realise that wealth, and that is not what we are in for. So it is just a paper figure. That it's not £1 million sat in the bank account that I can go and buy a Lambo with. This is actually a paper exercise where, if we sold everything and we had nowhere to live and we stood on the street, that's what we'd have. Well, rather useless to us, because pretty sure my wife would leave me, and the kids would probably go as well, if we just stood in the street, but we had a load of money in our back pocket. Anyway, so that's a wealth building strategy, but I strongly believe and have tried to advocate that I think you need the ability to have liquidity in your portfolio. So what I mean by that is, if you've got all this property, that's fine, but if you suddenly need the money, well, the reality is you've got to sell some stuff, and that could take some time. Let's assume there's no cash flow or the tenants stop paying their rent. All of a sudden you've got to sell a couple of properties. Well, it might not be the best time to do that. So, a lot of people talk about emergency funds and things like that, but I think no matter what your view is on all of those and how much anticipation you have, I think it's always good to have some funds that you can liquidate, even if it's an emergency and it might not be the best time to liquidate them, but you can turn them into cold hard cash. So on side of all of this is the portfolio that we've been looking for, which is a mixture of retirement income, so that we're not forced to necessarily sell property, or if tenants stop paying their rent or the legislation changes and it becomes unprofitable, we're not shoved into a corner. And also, money in ISAs and things like that essentially we can get access to at short notice if we require it. We do have some normal cash, but I don't tend to believe too much in having too much in an emergency fund, because it loses against inflation. I'm sure you'll see on some of my other videos I say about the 2% inflation. Basically, storing money in your normal bank account is losing you money unless you're getting around about 2% currently on that. Obviously that may change in the future. So let's flip on over and have a quick look at the various ISAs or cash positions that we have, if you want to call them one for a better word, with various things.
So we're here, we are onto the Trading 212 app, as you probably all have seen numerous times. So currently we have £11,907 in there, which has given us a return of about just shy of £600. This is a particular stock portfolio that I've purchased, which has got numerous companies in it. If you want to see any of the updates on this particular portfolio, then please do check them out. There's loads in my video archiving, so please feel free to there. Part of it is a pie, which again I do some video updates on the pie as well, but that's just a way of diversifying this individual portfolio rather than like YOLOing it all on Apple or Tesla or something like that. I do tend to spread it across. It also pays dividends, and gives a pretty healthy return. Then next we have our Vanguard account, which has got about £8,500 in it. You see there's a small amount in the pension, and then the bulk of it is in an ISA. The pension is just something I'm planning to set up as a secondary thing. We have about a sort of 60% in the S&P 500, and then two other global market index, so emerging markets, and then developed markets in Asia, but excluding Japan. and that total return on that is about £800. But as you'll see in a minute, the total return on the current portfolio is about 400, but the actual overall return is about 800, and that is because I withdrew 20 odd £1,000 from the ISA, which you'll see at the bottom here in the graph where it goes rocketing down like a roller coaster. Pretty much emptied out the account, but I left the profit at that point in, so that's the profit is 800 odd pound. So actually out of that there's some profit. And then here we are to my pension, which is with St James's Place. I know there a lot of people feel like that's a swear word because they charge you quite heavy fees. I do understand that. Some of it was about an education into pensions and understanding the stock market from the particular broker or representative for SJP that I use. And I found them very useful and really held my hand right at the start. And then secondly, it's actually easier for me with the way I've got companies set up to actually have this money paying into them. But as you saw, I was doing a little bit with the Vanguard pension, but I haven't quite set that up yet. But this SJP one you can see is diversified in very similar markets.
So hopefully that gives you a good overview of that side of the portfolio. And I'm a strong believer, as I said before, of having a good mixture of kind of assets and liquidity and wealth, and having it all spread out a bit, and not having all your eggs in one basket. And obviously there was a time in my life where we had all our eggs in one basket. We only had that one flat. We pretty much spent all the cash that we had on that flat, so that was that really, at that moment in time. But we were quite young then, and we could afford to take those risks, and I think it's very important, especially when you leave university and you've got kind of £50,000 worth of debt and you're working at the bottom of the chain and the rest of it, to lose focus on these things. And there's a lot of talk about, it's very difficult for young people to get on the market and, get savings and the rest of it. And I don't think that is necessarily the issue. I think it's a motivational thing as to what you want to achieve. If you see the target so far away, you just give up on it. So if you break that down into little bits, then it actually becomes a much easier task for you to manage. So yeah, hopefully that gives you a good insight into how I've personally gone from kind of leaving university, a broke student essentially, to having a small portfolio. I know it's not as big as some people's. There'll be hundreds of flats or properties or whatever, millions of pounds and various developments and things. But for me, on my Todd, obviously got the support of my other half. She does a wonderful job in the background, but we have kind of single-handedly, if you like, amongst us, used our kind of ability to live frugally and not inflate our lifestyles and live in bigger houses and better cars, at a time in our life where we really needed to focus on the wealth building, and now the wealth itself is building our portfolio. Hopefully that makes sense. If you did like the video, please do feel free to smash the like button. Don't forget to comment below. It'd be interesting to see other people's journeys. I know a lot of the people that like and subscribe to the channel are probably a bit younger than me. Maybe they're at the beginning of their the beginning of their journey. They might also be at the beginning of their investing journey, perhaps, and investing in the stock market, and maybe not going down the property route. Everyone always says, when's the best time to start? Well, yesterday was the best time to start today. The reality is that you could start on stocks and shares or building for a property deposit, that sort of thing. In order to build your wealth, both of those systems are pretty good, and you could get pretty well off with either system if you get lucky. But time and time again, real estate or property seems to be the kind of go-to, if you like, for wealth building over your generation of your life. So yeah, as I say, hopefully you like the video. Please don't forget to smash the like button. I'll try and do more face-on-face ones where you can see my face. It's nice to be back. And with that said, I shall see you next time.